Okay, it's time now for past picks from Gordon Reid. Gordon visited with us here on Market Call on October 17th of last year, so almost exactly a year ago. And one of his top picks on that day was Booking Holdings, BKNG, on the NASDAQ. And there you see the numbers. The important ones are at the bottom of the screen, the share price appreciation and total return of 59%. Gordon?
We continue to own this stock, Paul, and continue to like it. We've had ownership in Booking now for close to a quarter century, almost going back to the origination of the company.
Was it called Booking Holdings?
No, it was called Priceline.com.
Right. And it was called Priceline 25 years ago?
I believe so.
Okay.
I believe so.
Go ahead, I interrupted.
Yeah. No, that's all right. That's all right. But this is a fabulous company. This is a new age travel agent, if you will. It's an asset light company, so they don't have huge capital investments. Their real origination and success came out of an amalgam of relationships with European hotels. So European hotels, unlike North American hotels, don't tend to be dominated by chains. They tend to be small boutique hotels that really didn't have a voice. How do they get their message out? Well, the solution was doing a relationship with Booking or Priceline, if you will. And that's turned into just a fabulous foundation for this company. But Booking also now owns Kayak, they own OpenTable, they own CarRentals.com, many companies in the travel area. Their new initiative is called Connected Trips. Connected Trips is that if you book with Booking, they will stay in touch with you throughout your trip and say, oh, have you thought about, given that you're in Barcelona, taking this tour? And we can arrange that for you very easily. And it's turning out to be quite successful. So well managed, not expensive, trades about market multiple, maybe a little bit less than market multiple, growing rapidly. We think they'll do $200 a share in earnings in the upcoming fiscal period, and people are continuing to travel, and that's key. So buy Booking, in our opinion, and we will continue to buy it on behalf of Goodreid clients.
Okay. Number two on that day about a year ago, Chubb, the insurance giant, CB in New York. And there you see the green arrows at the bottom of the screen indicating price appreciation of 42%, include the dividend, a total return of 45%. Gordon? And
even at this level, Paul, trading at 14 times earnings. This is the largest property and casualty insurer in the world, the fourth largest insurance company in the world, thought by many to be the highest quality and most reliable insurance company in the world. So a lot of good things are happening. Insurance companies make their money really on two levels. One, on the underwriting business that they do. That is, you pay a premium, they insure you. They pay out if there are any claims, and what's left is their margin, which is called a combined ratio. And their combined ratio, if it's less than 1, or it means that they're making money, or 100. And the combined ratio of Chubb is pushing down to the 80 mark. So they've got a very high margin on their underwriting business. The other part of the business is the investments that they have. We give them the money. What do they do with it? Well, they've got, I think, $120 billion of cash that they have to invest. 80% of it's in the bond market, and they make an excellent return on that. So all in all, very successful business, very predictable, and we love it, and so does Berkshire Hathaway. Predictable even when things like Hurricane Helen come along and cause all kinds of damage in parts of the world where it does business? Yeah, that's a great point, Paul, and one that should be discussed. Insurance companies have to manage risk, so they offshore some of the risk to reinsurance companies, so that reduces their total exposure. But the other side of it that's often misunderstood is that when there are these types of events, it gives them pricing power. And pricing power has more ability to affect longer-term earnings than a one-time effect of a catastrophe. So in the long run, catastrophes give insurance companies greater opportunities to enhance revenue in future periods.
Okay.
And the market likes that.
Okay, and number 3 on that day, about a year ago, Dana. This is in the auto parts business, I believe. DAN on the New York Stock Exchange. Here we see some negative numbers, a negative total return of 15%.
This has been a tough space. They're not alone, but obviously this hasn't worked out for us. We continue to hold it. This, I think, is a timing issue. The end market has been weak. A lot of the promise with this company and other companies has come from the EV buzz, which we all know has been deferred. It hasn't gone away. It's just there's been a mismatch between adoption of EVs by individuals, and some of it because of charging issues and so on and so forth we can't get into today. But we think that Dana has some potential. There's a lot of chatter on the street about a potential acquirer coming in. Nothing concrete on that. They have talked about selling their off-highway division. So they're doing stuff, they're trading cheaply, but there's just no catalyst right now. So this is one that's a bit out of the sun, and that's what portfolios are made of.
Okay. Those are Gordon Reid's top picks from about a year ago. We'll be back with Gordon after this. As we go, we'll take a look at a snapshot of those top picks, and Gordon will resume taking your questions on U.S. stocks right after this.